couple minutes before we get started, so please just hang tight. I know we're scheduled for an hour, but I can promise you we'll be out of here well before then. So just hang tight and we'll start in just a few minutes. Thank you. All right. Well, it's a couple minutes after the hour, so let's go ahead and get started. My name is Dan. I'm with Golden State Finance Authority. I'm going to be your guide today as we go through this presentation on our Recover California Home Buyers Assistance Program. I'm also happy to have Angela Parrish from Change Mortgage on the call with me as well. She's one of our participating lenders, and I'm going to let her speak at the end of the call to give you guys more information about herself and how you guys can reach out to access the program. She can also provide you some feedback and some information on her experience with the product and how the process might go for you if you're interested in moving forward. Now, this is going to be a pretty quick call. The intent of this presentation is just to give you some background and some starting information on this pretty good product we have available to assist home buyers with their bridging the gap between the reality of home prices in California and what buyers can actually afford. Before I get started, in respect for everyone's time, I like to begin by just letting everybody know what is required to qualify for this program. And so there's going to be four main requirements from a qualifying standpoint that everyone should be aware of. The first is that you can't currently own any property. So at the time you apply for the program, you can't own any residential real estate property. including land. The second is that you had to have lived in an impacted area at the time of the 17 and 18 disasters, and you have to be able to document that. Now, the easiest thing you can do is if you go to our website, we have a link to the CAL FIRE map, and it's a specific link to show if you're eligible. All you need to do is you type in your property address during the time period. So whatever your property address might have been. So let's try our office address. Street. And when you pull up the map, your property on this map has to be either in red, orange, or pink. And those are high and very high fire severity areas. So that's the second thing. The third thing is that you have to be purchasing a property that is located anywhere in California outside of one of these high and very high fire zones. And you have to be able to get fire or homeowners insurance that includes fire coverage and not the California FAIR plan. And then the last thing is that you have to be below the income limits for the program based on the county where you want to buy and your family size. Let's say you want to buy a property in Contra Costa County. Based on your family size, you have to be below the 80% AMI level. So those are the four things that are going to be hard requirements for the program. And so I won't be offended if that disqualifies anyone on the call right now, but I did want everyone to know that those are the four main things that are needed to qualify for this program. We do have a question, and again, if you have any questions as we go along, there's a Q&A box you can type your questions into. We do have a question regarding, is the DTI a hard cutoff? It is, but I will explain the DTI a little bit later because it's a little bit different than what you're probably expecting, but we'll talk about that as the presentation goes on. Now, again, if you have any questions, there is a Q&A box on your Zoom toolbar. You can type your questions in there. So that being said, let me go ahead and start the presentation. And then as we're going along, if you have any questions, just feel free to type them in and I'll make sure to stop to answer your questions as they come up. So this is our Recover California Homebuyer Assistance program. It's targeted towards low and moderate income households that were living in high and very high fire severity zones in qualifying disasters for 2017 and 2018. Now, we do have a bunch of different allocations for this program, but this presentation and this funding is specifically for people impacted in 17 and 18. What this program is going to provide is up to $350,000 per household in down payment assistance. And the goal of this is to help people that were impacted, again, bridge that gap between what they can afford and the real prices of homes in California to help them purchase a property and get back into home ownership outside of a high fire zone. Now, today we're going to be talking about the program features, eligibility requirements, which I pretty much covered, and then the process for you guys as prospective applicants. This program is being provided by the California Department of Housing and Community Development, acronym HCD. It is funded through a Community Development Block Grant for disaster recovery. It's a grant from HUD. And GSFA, who I work for, is the program manager and administrator of the program. Now, we are a public entity and agency that's been in California for over 30 years, and our primary focus has always been to provide programs that help with affordable housing and home ownership. And primarily what we focus on is providing financial tools. So this is just, again, one more program product that kind of fits our mission. Now, we don't lend directly. We're not a lender. And so we work with a network of lenders like Angela and her team at Change to provide these programs to you guys. And so if you're interested in qualifying or applying for this program, you don't apply directly through us. You would go through the lender who will help you with the whole process. Right. Now, just to give you some perspective, our programs have been around for, again, over 30 years. We pretty much provide programs for all loan types. And we do provide primarily down payment assistance, and we provided over $680 million over the last 30 years, and we've helped more than 87,000 families to become homeowners. Now, everyone has their own reasons on why they want to buy a home, and everyone is going to benefit differently from being a homeowner. In general, a lot of people purchase homes because they realize that purchasing a home in a neighborhood with a lot of homeowners is going to result in more neighborhood stability. It's going to increase the educational achievement of people in that community. More home buyers means more increased civic engagement, improved psychological and physical health. And generally speaking, there's going to be lower crime rates in areas that have higher rates of homeownership. From a financial perspective, homeowners tend to significantly eclipse non-homeowners when it comes to median net worth, with a majority of their wealth tied into their homes. On average, it's about 38 times more wealth for a homeowner versus a renter. This program is trying to help convert more, again, renters into homeowners by offering up to $350,000 as a DPA gift or a DPA. It's going to be available in the form of a forgivable second. The forgivable period is going to be a 5-year term. There's no payments because it's deferred. It's forgiven on a prorated basis. Basically, every year that the applicant or the homeowner now has the property, lives there for the first 5 years, every year 20% will be forgiven until it's all forgiven. Now, if that homeowner decides to move out of the property within that 5-year period, whatever portion is not forgiven would be due at that time. The intent of the program funds are to be used for down payment and closing cost. And that also includes any kind of prepaids like your homebuyer education fees. And so again, to help you bridge that gap between what you can afford and what houses cost. Now, this is a map of the entire process for the program from start to finish. It begins by having your lender and yourself determine if you are eligible for the program. Once that's been determined, they're going to qualify you for a first mortgage. They're going to estimate based off of your first mortgage how much assistance we can give you. Once you know that number, you can start looking for a property. Once you've found an eligible property, your lender will lock and reserve the funds for the program for you. You will complete your homebuyer education, and then your loan will close and you'll get your keys. In an ideal world, and I say ideal because, nothing's ever perfect, but ideally this entire process should take about a month. And that's if everything goes smoothly. I can tell you that in practice, you're looking at usually more like 45 to 60 days. But if everything runs smoothly, it could happen as quickly as 30. But again, this is a general overview of the entire process. Everyone's experience may differ slightly. So how would you be eligible for this product? You have to be a renter or a previous homeowner that is low to moderate income, below 80% of the area median, again, based on your family size. And the income we consider would be the income of all adults. So anyone over 18 living in your household that you're going to be buying, their income will be included in that household calculation. The size of your household is based on everybody in the house, but the income is just based on adults. Your property at the time of the 17 and 18 disasters, again, has to be in one of those high or very high fire areas. And so in 2017, you're looking at properties in Sonoma County, Ventura County, and then these 5 zip codes. And then in 2018, you're looking at the entire county of Butte, Lake, Los Angeles, and Shasta. And again, for all of these jurisdictions, when you type in your address during that time frame, it's got to show up in red, orange, or pink on this map. That's what's considered high fire or very high fire, and that's how you're considered impacted and eligible for the program. Now, the lender is going to qualify you. We had a question earlier about DTIs. This program is a little bit different. The program wants to make sure that you have enough skin in the game. And so we want to make sure that the lender qualifies you at a minimum debt to income ratio of 42%. However, we also want to make sure that you're not put in a position where you're financially stretched. And so we do cap your max DTI at 45%. So using that range, the lender will determine what's your maximum mortgage you can qualify for within that range. And that number, your loan amount for your first, will help us determine how much assistance you can qualify for. Now, all of our mortgages for this program are going to be 30-year fixed rate fully amortizing loans for purchase transactions only. Most of these loans, because of the size of our assistance, will probably be conventional, but there are cases where a buyer may go FHA, VA, or USDA because of their need. But majority will be conventional because of the down payment. Now, this probably won't be an issue, but the maximum loan for the first will be 832,750, or the limit for the county and loan type, whichever is less. But because this is an affordable program, no one's probably going to reach that. I think the highest I've seen so far is about 450. Income limits will be based on wherever the buyer is purchasing their property, and they can go to the HUD website, find their county, and then look at the 80% level based on their family size. And again, this will incorporate the income of all adults over 18 living in the household being purchased. The minimum credit score for the program is 640. If the buyers want to go with the manufactured home, it's going to be a 660 credit score minimum. And then we do require home buyer education taken by at least one borrower. And it's going to be a specific course available through eHome America, 8-hour online course with a one-on-one consultation. We have a discount for that course, but if you qualify and you use our program, the program funds can reimburse you for the cost of the education, which I think is about $99. Question. To prove a borrower has rented in a fire zone, can lease agreements be from a private party, such as a family member, or do they need to come from a property management company? The general rule of thumb is we will always do our best. And the lenders that we work with on this program, they will always fight for you as well. But we will submit whatever you provide us to HCD to see if they will accept that as proof of being living in the area. Generally speaking, they would prefer a third party confirmation of your rent. But if all you have is a attestation or a explanation from a relative or a family member, you can provide that. We do require at least two forms of proof. So you're going to need like a driver's license as well, or your tax returns being filed at that address, or a utility bill. Basically, the more you can provide, the stronger your case can be. The more official the documents are, the stronger your case can be as well. But again, we will do our best to get as many people qualified as possible. Question, is there a cap for the housing ratio at the front end? Great question. We don't have any restrictions. I know that we've had some complaints about being confused with these numbers here. And so these numbers are based on your total DTI. So your back end ratio must be between 42 and 45%. As far as your front end ratios, there's no specific guideline coming from GSFA. Your lenders would strictly follow whatever's required by their guidelines and your loan guidelines. So the way that we estimate how much assistance we will give the applicant is it's based on that first loan amount that they qualify for within that DTI, and it's based on the lesser of the appraised value or the purchase price, and then whatever the closing costs are and the prepaids. And then if the buyers have any liquid assets over 100K, the amount over 100K would have to be contributed to the transaction. And then if the borrower received funds from the same kind of program, like a disaster program for the purpose of buying a home, and they still have that money, that's what's considered a duplication of benefit or a double dipping. So if you got any money from a similar program for the purpose of buying a home that you still have, that would have to be considered as part of your transaction as well. So the way that it works in general, because most people don't have liquid assets over 100,000, and most people don't have duplication of benefits of money they still are in their possession. Most people don't. So the general way that you would do it is you take your lesser of your purchase price or your appraised value. You would minus whatever your first loan amount is. So let me just pull up a calculator for everyone to see. Let's say my purchase price is 500,000 and I qualify for $195,000 loan. I add in my closing costs, let's say they're 15,000 and my prepaids. That means that my need, this is what the need calculation is 320. And as long as this calculation on this page right here is less than 350 or up to 350, we will provide that amount to the applicant for their transaction. In this case, my calculation was 320. So if I were to apply for the program based on my scenario, I could get up to $320,000 to go towards my down payment and closing cost. Question. So as long as you get an AUS approval, we should be good. Well, the AUS approval is strictly to determine and to ensure that your DTIs are between 42 and 45%, your total DTI. There's also other factors involved, like your FICO score. Even if you have a 620, but you get an AUS approval, our requirement for the program is 640. So when it comes to the AUS findings, all that we're looking at is strictly the DTI. Question, can you provide an example of this calculation? Just provided one right there. But again, it's very simple. As long as this calculation right here is less than 350, you can get up to 350. So on your screen now are three different scenarios. All have the same purchase price of 600,000. The buyers in each scenario qualify for different first mortgage amounts, which means that their required down payment, their closing cost, and their cash to close is going to be a lot different. In two of these scenarios, the buyers have a duplicate of benefit. And the duplicate benefit, it would be the same if you had excess liquid assets over 100K. It's not both, it's either or. So whatever's greater between your liquid assets over 100,000 or your duplicate benefits is what would be in line F. And doing the calculation, you look at your cash to close, you minus your duplicate of benefits or your liquid assets, and that gives you the need. That's what we calculated on the previous screen. And as long as your need is less than 350, you would get it. So in these first two cases, they would get it. In the last case, their need is 419. We can only provide them with 350. So just a heads up, again, when it comes to ratios, the program only cares about your total back-end DTI being between 42 and 45%. As far as your front end and your housing ratios, that's strictly up to whatever is allowed by your loan guidelines. So that'd be a question for your lender. So once you know how much you can qualify for, then you can find a property. And you want to make sure that your property is not in a high fire area. And so you can use that same map earlier, except you type in, actually take it back. There's a different map for that now. There's a new map. It looks almost the same, but it's updated. And you could type onto this map the property that you're buying. And as long as that property doesn't show up as orange, pink, or red, it would be eligible for the program. And again, it does still have to qualify for a standard homeowners insurance policy that includes fire coverage, and it cannot have the California Fair Plan as an accompanying policy. All properties must be single family, one unit, but that can include ADUs. You can use the program for condos as long as they're agency approved, townhomes, PUDs, and manufactured housing. Remember, for this one, you're going to need a 660 credit score. This program, again, is for one unit only. So this wouldn't apply, no multi-units, no co-ops, no investment, no recreational, no vacation, and no second homes because those are not considered owner occupied as their primary residence. There is going to be a bedroom cap based on the household size. So your household size, the number of people in your household, will dictate how big of a house you can buy. So we've had quite a few applicants that were single applicants, single households, and unfortunately, that means they would be capped at a two-bedroom. So the household size will dictate the number of bedrooms that can be purchased. Now, if you have an area where you are having issues finding inventory, we can definitely try to reach out to HCD to see if we can get an exception for you guys on your house or your bedroom sizes. It's a possibility, not guaranteed, but if you are having issues finding two bedrooms in your area, there may be a possibility to get you an exception for a three if your realtor can provide inventory numbers for the area and show that there isn't any inventory available for two-bedroom properties, to give an example. So here's a quick slide just to show you how this program can hopefully help you guys become homeowners. Let's say you only qualify for 268. If you add in our assistance, you can buy a home that costs $600,000 because our money can cover your entire down payment as well as your closing cost. Question, who do we reach out for the exception? So when you talk to your lender and your realtor, they would be able to provide us with the documentation that, to help request that exception on your behalf. Again, you don't reach out directly to GSFA. The whole process for this program is going to go through your participating lender. And I do apologize. We actually have two lenders on the call for us today. We have Angela, and then we also have Mark, and Mark is with Guild Mortgage. And I'll let them both talk briefly once we finish this presentation. Oh, great timing. So how do you guys get started? Well, the whole process, again, is going to go through the participating lender. We are more than happy to answer any questions that you might have. But if you're looking to apply and you want to get, the process going, your lender is going to be your best bet for doing that. Now, full disclosure, because I don't want to violate any fair lending laws, you can go to our website and we do have under the program or under resources a list of all of the lenders that offer this specific product. But on the call, we happen to have two very knowledgeable and expert lenders that have done many of our loans. But if you want a complete list, again, it's available on our website. So the goal of the program and our goal as an agency has always been to help people who want to buy homes get into those homes, establish long-term housing outside of high fire areas, and build that financial security. And so we are really hopeful that for many of you, this program is going to help you guys do that. Now, that is the end of the presentation itself. If you have any questions, please do stick around. But while you're thinking of your questions, let me go ahead and open it up to Mark and to Angela in case they wanted to provide any kind of commentary or feedback on the program itself. And they can also give you guys their contact information to reach out to for the program as well. You're on mute, Angela. I can see her. No.
Okay, Mark brought up a good question about the buyer broker compensation. And it's my understanding that you cannot use any money from this program to pay for your realtor if the seller refuses to pay for the realtor fee.
So everything's always changing. And if you request an exception in advance, HCD may grant an exception to use the funds to pay for the realtor fees as long as those fees are reasonable and customary. So
Okay.
it is possible.
That
And
makes-
quick segue off of that, have there been any exceptions granted to that as of today?
I'll be quite honest. I don't think anyone's asked yet. I feel like we might have had one before, but I don't recall, and I don't think it's a very common ask. I thought it would be more common, but I don't think I've recalled it being asked recently. But I've been told that it is possible if you get an HCD exception when you're looking at that property.
Copy that. Thank you.
Yeah. What we don't want to have happen is we don't want the process to be manipulated to increase, the cost for the buyer. And so that's kind of what AC is trying to avoid is having the borrower pay fees that they can possibly avoid. But if it's unavoidable, they are open to making exceptions.
Thank you. So Dan, do you have any questions in the
I
Q&A
don't.
box that you think Angela or I could address? I don't see anything in there myself.
I do not have any questions. And so if you wanted just to give your 2 cents on your experience with the program, what the borrowers can expect, and then if you want to provide your contact information, I can send it out to the group.
Well, as you know, Dan, we got behind this program from the onset and have done several of these loans. And I think the main thing is that uh, potential utilizers of this program need to understand that this program, it will get people who could not afford to buy a house to buy a house. Most of the loans that we've closed at our office were for very small amounts. The first mortgages were between as little as 30 grand, but mostly cap out at about $150,000. And I think that's one of the reasons why you're not hearing about this from most of your local lenders who could possibly participate in this program. It's not a moneymaker for lenders. This is a true community service that the lenders that will participate in it are providing, because we're not making money on these loans. We're doing it because it's cool. I've got several clients up here that they're paying $1,000 a month for rent, and they ended up buying fairly new houses in good condition. It has to be a livable, decent house. And I've got a couple, but the one I'm thinking of right now, he's paying $1,200 a month on a mortgage. He was paying almost that in rent, only now he is a homeowner, and it's going to create the possibility for him in 5 years. Some people, we haven't really hit on this, but if you make your payments on time and continue to reside in that house for 5 years, the amount of that down payment assistance is dismissed. It is forgiven, meaning you bought a $400,000 or a $500,000 house with $100,000 loan and $350,000 worth of assistance. After 5 years of on-time payments, that it goes from a loan to being a grant or a gift for all intents and purposes. You own that home, that down payment assistance is forgiven. You now have this guy's going to have a $1,200 payment on natural appreciation, what will be a $500,000 house, and he will have all that equity, which provides generational wealth opportunities for him to help his children or his family participate in the housing market as well. So this is the I call it the super lotto. Dan heard me say the super lotto of loans at one of our last seminars, because it truly is. The window for this is very limited if you qualify, but if you do, please reach out to one of your local lenders that's participating, because this is truly a life-changing program. There's nothing else out there like it. I thought it was fake when I first heard it advertised. I thought there's no free money, and typically there's not free money. This is truly free money if you qualify for the loan. The only way you're going to know that, contact your local lender who's participating and find out.
Thanks, Mark. I don't know if Angela had any comments, but we don't seem to have any more questions, so I'm just copying and pasting your contact information.
Well, I think Mark covered it well, but we've done a lot too, over a dozen of those, and they just feel good to help your community. Everyone we've closed, we've had people cry. We just got a letter today, a 1 year anniversary, and just thanking us again for helping her. So it's a great program. Also it's the best down payment assistance program I've ever seen. So it's incredible. And the best thing to do is reach out to Mark or myself or any of the lenders that are approved in your area and get your application going. Because there's no cost to get pre-approved and see, what your numbers look like. We're all happy to take a look at them.
Well, thank you guys so much. So everyone has both of your information in the chat box to take down. And then I also put in my email address in case anyone wanted a copy of the presentation or they needed anything else. And so with that, I want to thank you guys for taking time out this evening to learn about this product. If for some reason you can't qualify for this specific disaster, please be aware that, we do offer the same program for other disasters. It's just a matter of funding. And so we have this program available in 2020, but funding is currently out. There may be new funding in the future. And we have a flood variant of this program for 2023 and 2024. So always check back to make sure that, see what's available. There was a question, can a 22-year-old person who lived in a fire with their family who now wants to buy a home and pays rent to their family qualify for this product? So as long as that person at the time of the disaster lived in an eligible impacted area, and as long as that person doesn't own a home now, they can apply. And so we have had young people who were living at home at the time of the disaster, but living or that and now don't own a property and wanted to apply, and you can definitely do that. And again, if you have questions on whether or not you qualify, we again, like Angela said, it doesn't cost anything to get qualified. And so we would strongly encourage you to reach out to the lender to see if this program can help you.